It's been a busy week. That's our topic for today's Backstage Pass. Good morning, happy Friday. Wow, what a long, busy, kind of crazy week it's been so far this week. A lot of data that came out, a lot of stuff in the stock market, stuff for the bond market, stuff with the Fed, stuff with the economy. It's just been a wild week. It's not quite over yet either. Got some more news coming out for you today. But first, stocks are up generally this morning. Mortgage bonds are down just a little bit, and mortgage rates should open about the same or maybe slightly worse than when they closed off yesterday. We'll talk more about that in just a minute. But that last piece of news that we've been waiting for this week is PCE data, the Personal Consumption Expenditures. PCE data for the month of June came out, and overall it was slightly higher than what was expected, about 0.1% higher on almost all of the data points than what was expected. So headline inflation data showed that June, month over month, June inflation increased by 1%. Year over year, inflation rose to 6.8%. And the core reading on the inflation data for PCE came in at month over month 0.6%, so 0.6% increase. And then year over year, it landed at about 4.8% increase. Now again, all this data was hotter than what was expected, and initially when bonds opened up this morning, they started to kind of sell off a little bit, but they quickly recovered. And the reason why is because this story that the PCE data is telling is the same story that the CPI data told for the month of June. When that was released 2 weeks ago, markets have already kind of reacted to that. And you throw that into the water with the data and the news that we've had this week so far, the two negative GDP readings, you've got the Fed fund rate going up by 75 basis points, all of those things combined, and the bond market staying pretty resilient and a little bit less troubled by the PCE data that was hotter than expected today. Now, mortgage bonds are down about 11 basis points at the time of recording. They're testing a 100-day moving average ceiling, a technical ceiling. If mortgage bonds can break through that, it's going to be great for interest rates, mortgage rates. There's a lot of room to go to the next technical level. The 10-year yield is up 1 basis point, and it's underneath its a 100-day moving average as well, right where we want it to stay. What that means again for mortgage rates is today, because the bonds are slightly lower, we could see mortgage rates open up just a little bit higher today, or about the same. Now, with all of the crazy choppy water news of the week behind us this week, we don't expect to see a lot of volatility or a lot of movement in the market throughout the day today, but we'll keep an eye on it and let you know. And that's all the news that we have for today. Thankfully, this week is over. That's all the news we have for this week. I hope you have a great weekend. And remember, stay positive, and we'll see you on Monday.